This week in the parish of bourses and market structure, a week of broadly poor results as Shanghai plans expanded warehouse network, Nasdaq goes great guns with AWS, and LSEG also extends. My name is Patrick L. Young. Welcome to the Bourse Business Weekly Digest. It's the Exchange Invest Weekly Podcast, episode 293. Good day, ladies and gentlemen. This is a very brief reduction of highlights amongst the key headlines from the week in market structure. All the analysis of the many events and happenings from the past 7 days can be found in Exchange Invest's daily subscriber newsletter, the unique guide to the bourse business and daily to your inbox. More details at exchangeinvest.com. Over in BitCarnage, in the week when Paul Atkins became the new SEC crypto messiah, it was important to put in perspective the remarks of his predecessor, Gary Gensler. For GG, when he became SEC boss, was also seen as a crypto messiah. After all, he championed the underlying tech in an MIT course during his CFTC SEC interregnum. In the end, things went sour because inside the temple, GG didn't like the moneylender, to borrow a biblical turn of phrase. Now out of office, GG is speaking out. Gary Gensler takes a shot at crypto, says market is built on 99% sentiments, went a headline in the media this week. The bit which will probably most upset the crypto bros is GG's headline prognosis is rather absolutely correct. There are some wondrous tokens out there with inherent value, but the vast majority are at best foolish, if not utterly misguided, on a range through to utterly sleazy beyond belief. There are grounds to criticise GG as SEC chairman, but actually in seeking to crack down on a crypto Wild West market, he was frankly not far wrong. If you enjoyed this excerpt, you may be interested to know you can read BitCarnage every day on Exchange Invest. Alternatively, if you want to follow BitCarnage, the daily update on happenings in the world of crypto and digital assets, you can find BitCarnage as a standalone on Substack. In the mainstream world of exchanges, China is considering setting up overseas warehouses for the Shanghai Gold Exchange. The issue may be as much how the LME, London-based but SAR Hong Kong-owned, is viewed compared to fully mainland SGE, as opposed to the issue of warehousing per se. Either way, an interesting push by the Shanghai Gold Exchange to monitor with interest. Hong Kong Exchanges itself, the parent, the LME, they've unveiled a strategic investment for permanent group headquarters, reconciling themselves within the core Hong Kong Exchanges towers in Hong Kong. Meanwhile, full marks to NYSE and indeed many other exchanges across the parish as we've had a remarkable period of volatility with broadly good uptime. Lynn Martin, an op-ed for CNBC, notes NYSE systems are working normally, handling record volume more efficiently than during the COVID crash. Great to hear, and congratulations to all in the parish who've delivered remarkable uptime during a very busy period.
Thanks for listening to Exchange Invest Weekly. We welcome your feedback. You can contact me directly, patrick@derivativesvision.com, with any comments. Meanwhile, if you enjoyed this show, we would welcome you giving us a thumbs up. Or, if you have time, a positive review will always be welcome, wherever you find this podcast.
In results, it was a very busy week for results in the parish. All the details were in Exchange Invest Daily, the newsletter no person can afford to be without in capital markets and market structure. For the sake of this podcast, let's look at some edited highlights. It was indeed a frantic week of results. Nasdaq and the EEX produced the best numbers in the parish by far, and tragically, a large number of people disappointed egregiously. Amongst them, CME, not entirely terrific, and indeed various other players including DB1, Bursa Malaysia, and indeed the Japan Exchanges Group. Over in deals, one key deal to report this week, Ethiopia Stock Exchange, that's the nascent bourse there. It has raised $26.6 million, double the capital target. That's on top of a previous round, which raised $12 million a year ago. Meanwhile, Exchange Invest is proud to have launched a special edition inspired by my visit to ring the closing bell at the New York Stock Exchange on July the 5th, 2024. Patrick L. Young's original bestseller, Capital Market Revolution, was the first breakthrough book in fintech. A decade before that word held common currency. It has over 10,000 new words of additional pith, placing the past quarter's entry in perspective alongside the original text, which has proven remarkably successfully accurate through the years. Capital Market Revolution 25th Anniversary Edition is published by Exchange Invest, is now available as an ebook via Amazon Kindle at the ludicrously reasonable price of $9.99, a quarter of the price of the original shorter print book a quarter century ago. Meanwhile, if you fancy some financial insights with moving pictures, check out our live stream Tuesdays 5 o'clock London time, midday New York time, the IPO video live show. Catch the back episodes on LinkedIn and YouTube via IPO-video. The latest IPO-VID was episode number 176 on the future of research, a fascinating discussion with Matthew Ringenberg. And coming up next week, we got IPO-VID 177 with the authors of a fabulous new book on inclusive finance via fintech, Alessandro Hatami and Megan Johnson. Our finance book of the week this week is The Anatomy of Finance, a classic tome by George Soros, which presents his theory of reflexivity. In product news this week, Eurex have decided to launch futures on EU bonds at last. Eurex eager to be seen as the market leader when it is really reacting to ICE, which took the opportunity here when DB1 deemed it insufficient. DB1 continues to lose ground by dint of its managerial mindset, producing low-risk pension-paying career extension approaches, as opposed to actually girding loins and taking a risk or even leading the market. One may also term this approach how very European in the current era of EU-led declinism of forethought from the failing continent. Meanwhile, plaudits to Euronext on getting past a perma-PLY bugbear single prospectus. That's great news, albeit the problem remains the regulatory layer, where prospectus is shorthand form of spelling 1000% total posterior cover for intermediaries. That doesn't really help investors, but ultimately it's very difficult to see anybody who's got the guts in the bureaucracy to cut through and deliver a better prospectus method for the future. Over in technology, Nasdaq and AWS, they're unlocking the new era of growth for capital markets globally with next-generation infrastructure solutions. That Nasdaq announcement came along with deepening ties with JSE in Johannesburg, presumably therefore the LSEG Millennium installation there must be at risk. And indeed, as well as those ancillary services, there's more cooperation with BNV Mexico and internally across the Nasdaq Nordic markets, while the core use case for AWS is strengthened with many new tools and services to help exchanges into the cloud. That strengthens the core Nasdaq use case, especially with existing exchanges seeking to maintain the luster of their brand being associated with the Nasdaq enterprise. LSEG announced a similar term extension with AWS, albeit bereft of the pizzazz of Nasdaq. It's almost as if LSEG has lost its mojo. One piece of relief in technology this week, JPX, they had a hack, you may recall, a few weeks ago. After a concerted investigation, they've confirmed that no email information had leaked. Finally, a long-awaited installation is complete. KRX have finally managed to complete the upgrade of the Vietnamese stock exchange system using KRX technology. Over in regulation, a lot of stories there. All the news was in Exchange Invest Daily. One that really hit the headlines, even in the Brussels Bugle. Republicans plan to scrap the US audit regulator. It's a fascinating moment. Let's face it, auditing sucks. The auditing process is a wondrous coherent concept, but in the breach, pretty much never, I can think of precisely 0 examples, manages to foresee fraud and or management of a reckless endangerment fashion, let alone seriously poor finances going forward. Having a separate regulator which further gummed up the works has not made investing safer, but it has helped a lot of bourgeois lifestyles in the cluster mess of consulting cum audit firms which have been so busy crossing T's and dotting I's that the companies they serve have frequently ended up semi-becanned or at least bereft of a larger sum of consulting funding. That brings us, ladies and gentlemen, to Big World. The USA alone amounts to about 26% of global GDP. US cargo ships, last time there were statistics, 2019, amounted to 0.4% of the world's merchant shipping capacity. Therein, ladies and gentlemen, lays a key MAGA choke point. And on that mysterious and magnificent note, thank you for listening to this Exchange Invest Weekly Podcast number 293. Join us daily via exchangeinvest.com, or if you're a new exchange or marketplace you'd like built, get in touch. My name is Patrick Young, and I wish you a great week in life and markets.
This show relates to the business of bourses. It is not to be construed as investment advice, nor are we making any investment recommendations. Please consult an investment advisor before you make any investments, and for goodness sake, do your due diligence and do not make investments without complying with the regulations in your home state. Exchange Invest cannot be held responsible for any investment decisions made as a result of our program, which is for entertainment purposes only. The material herein is copyright Patrick L. Young at the date of publication, while our music and sound effects are sourced from copyright-free sources. Thanks for listening to Exchange Invest Weekly, the exchange of information.